What is going on, everybody? It's Stas here. Welcome back to another video. So just like that, earnings season is upon us yet again. We have 7 companies, 7 stocks to break down today, all of which are set to report earnings this week and next week. So we're going to break down earnings estimates, my thoughts, and of course, guys, we're going to break down the charts and what I'm looking to do with these stocks. So hit the like button, make sure to subscribe, and don't forget to get up to 15 stocks for Moomoo with at least a $100 deposit. Simply use that link down below or go to StasSurFest.com/Moomoo. And for a limited time, guys, listen to this. Your uninvested cash on the Moomoo platform will earn 8.1% APY, which, guys, that's unheard of. It's unbeatable. So get on it. Use that link. Get your money. And with that being said, cheers. Let's dive right into the video. So overall, guys, at this point, heading into this earnings season, we are breaking out overall in the stock market. We had SPY on Friday hit an all-time high, and Triple Q, you guessed it, also hit an all-time high. You guys can see here we hit $496.60 on Triple Q, which it was trading sideways for about 10 days, for a week to 10 days. You guys probably remember that. You can see it right here. And SPY was doing the same thing. If I want to pull that up, or if it lets me pull it up, let me show you guys this. Bear with me. Hold on a second. Come on. There we go. So you guys can see SPY here hit, I think, almost $500 per share. I'm not sure why this is lagging on me, guys. Come on. What's going on here, Thinkorswim? Why are you messing with me right now? There we go. SPY hit, it's been well over 500. What am I talking about? Triple Q almost hit 500, but SPY hit $555 per share. So it's safe to say, after a little bit of consolidation, chopping around, the markets are breaking out yet again. All-time highs are pretty much back, right? Which, is that surprising? Not really. I'm not sure if you guys are surprised. I'm not. I don't know about you. But yeah, with that, with us breaking out, we're heading into earnings season, which, again, we have 7 companies, 7 stocks to break down. So let's just dive into it. Let's not waste any time. Number 1 here is Netflix, ticker symbol NFLX. Let me pull it up here and show you guys. So this one isn't this upcoming week, but I believe it's the week after. Let me double check the date here, guys. It's on the 18th of July. So yeah, not this week. Is that the next week? Either way, I think that might not even be the next week. It might be the week after. Either way, Netflix is a very big company. Typically, out of the bigger tech stocks, Netflix is one of the first to report. So we have them, of course, Tesla as well, which we're not going to get into in this video because I've talked about Tesla in many videos recently, guys. But yeah, Netflix, their earnings per share estimate for the current quarter they're about to report for is $4.74 versus $3.29 from last year. So their EPS, guys, is looking to increase by about $1.50 year over year, which is really good. And by the way, Netflix stock, I mean, you guys can see the chart is breaking out. It has been all year. We're at pretty much all-time highs yet again after starting off the year at about, what, $400, $450, right in that ballpark, and now we're pushing $700. So again, EPS estimate is $4.74, with them doing $3.29 last year, and the revenue estimate is $9.53 billion versus, let's see here, $8.19 from last year, up 16% year over year. That's projected. So almost $10 billion is projected, guys, for Netflix here. And this stock, if I zoom in a little bit, looks like it is slowly starting to break out. If I actually show you guys this right here, and we are a bit laggy on Thinkorswim today. I'm not sure what's going on. Maybe my laptop's too hot. Either way, it might be time for a new laptop, guys. That's on a side tangent here. A little side note there. Maybe we'll get the new one with the M4 chip. I think those are coming out pretty soon here. We'll see how that goes. But yeah, Netflix, we have a clear ascending triangle. You guys see that right here. $690, $700 resistance, and we're not fully breaking out yet. But by the looks of it, I suspect, we're going to break out maybe even before earnings. Heck, maybe after earnings, we'll see how that goes, but it looks like we're setting up for a breakout before earnings. And you guys probably remember the all-time high was hit back in November of 2021, and guys, that was at $700. We're now at $690. We're almost there. This is looking really good on the charts, and if I had to guess, who knows, but if I had to guess, I think all-time highs will hit fairly soon here, maybe even before earnings, like I said. So number one is Netflix. Stock number two is Pepsi, ticker symbol PEP. Pepsi stock is actually down about $20 per share heading into the earnings. You guys can see we hit 183 a couple weeks ago, actually about 2 months ago, and now we're at 163. So again, $20 or about 10-11%. So we're officially in correction territory, and we are noticing a little bit of a bullish divergence on Pepsi stock. I'm noticing the RSI strengthening as we're kind of flattening out a bit on the chart. So we'll see how that plays out moving forward. They're set to report on the 11th, which I believe is Wednesday. Let's see. The 7th is Sunday. Monday's the 8th. 9th is Tuesday, 10th is Wednesday, so they're the 11th. So they're on Thursday in the morning, so keep your eyes on that. We have EPS estimated at $2.16 versus $2.09 from last year on revenue of $22.62 billion versus $22.32 billion from last year, so up around 1.4% year over year. So don't expect booming revenue growth out of Pepsi, guys, only 1%. But realize we're down a good chunk, about $20 into earnings. So if they surprise, if guidance comes in maybe better than expected, or maybe EPS revenue for the current quarter comes in better, this stock could end up rallying, in my opinion. And guys, it's been pretty flat over the last couple years. So let's see if this earnings report and the guidance can kind of spark the bulls back to life. We'll see how that ends up playing out on Pepsi. We also have Delta Airlines this week, guys. Ticker symbol DAL. This stock is down about $7 from the recent highs, but still very much, in an uptrend. They're set to report earnings on the 11th, so Thursday morning, same time as Pepsi. Delta's EPS is projected at $2.36 versus $2.68 from last year, so EPS is compressing a bit year over year on Delta, but their revenue is projected to go up, roughly 6%. $15.47 billion versus $14.61 billion from last year. So, yeah, about a 5-6% increase year over year in revenue is expected. Not bad for Delta. And again, we're down about $7 into earnings, or about 15%. In correction territory. So let's see if we get some sort of relief rally post earnings, maybe before earnings. We'll see. We are approaching a big spot of support right now. We can see Delta was struggling to break out of the mid 40s back in 2021, 2022, and that's kind of where we are right now. We're holding that point. So let's see if buyers come in the mid 40s on Delta. JP Morgan, guys, so earnings season is upon us when the banks start to report. So on Friday, we have a bunch of banks, JP Morgan being probably the most important one, depending on who you're talking to, right? So their Friday morning, JP Morgan is projected to report EPS of $4.13 versus $4.75 from last year on revenue of $41.99 billion versus $42.4 billion from last year. So revenue is going to be down roughly 1% on JP Morgan stock. But guess what? The markets, they don't give a crap. I guess they're pricing that in. They already know about it, obviously, and the stock's been breaking out all year. In fact, this thing is also breaking out even further as of last week. You guys can see the ascending triangle here is looking juicy. That played out. We hit 210. Now we're pulling back down to about 205 to test an old resistance as support. So JPM, guys, keep your eyes on a potential continuation play here. Maybe before earnings, maybe after earnings, which again are on Friday. And Wells Fargo also has earnings on Friday. Let me pull this up and show you guys. So WFC is their ticker. They're looking to do EPS of $1.28 versus $1.25 from last year on revenue of $20.2 billion versus $20.53 billion. So yeah, pretty much half of the revenue that JP Morgan is projected to do. And just like JP Morgan, guys, Wells Fargo, their revenue is projected to go down about 1.5%, 1.5% year over year. And we are trying to break out of the moving averages on Wells Fargo here on the 4-hour. We're trying to do so, not fully doing it quite yet, but it's worth watching. Who knows? These banks might surprise, and we could be pushing to new highs shortly thereafter. Personally, guys, full disclosure, I'm not in any of these bank stocks and any of the stocks we're talking about in general today, but I'll consider it as a trade. Maybe when earnings come out, we shall see. So that's Wells Fargo. We also have Citigroup. And by the way, guys, if you have not hit the like button yet, hit that like button. Let's run the likes up on this video, at least 150 likes. Come on, and make sure to subscribe. We're trying to get to 50,000 subs this year. I appreciate you all for tuning in as always. So Citigroup is on Friday as well. Let me double check that though. I'm pretty positive. Let me see though. Come on. Yeah, the 12th in the morning. So Citigroup breaking out as well. Just hit a fresh high, looks like a couple days ago. They're looking to do EPS of $1.41 versus $1.33 from last year on revenue of $20.08 billion versus $19.44 billion from last year, up around 3%. So out of the banks we're talking about today, guys, 3 of them, the only one that's looking to grow revenue year over year, projected, of course, these are all estimates, it's Citigroup, up 3.3% year over year. And again, they're breaking out, which is a pretty good sign. Not fully, I guess, but we are seeing some signs of a push towards the mid-60s, which is good. And let's see if earnings can get us even higher on Citigroup. I'm not sure what the all-time high is on this stock. Let's see here. Holy smokes, $5.90 back in 2000. All right. I'm not sure really what happened here, but yeah, holy crap. $5.90 is the all-time high on Citigroup. Maybe you guys can fill me in on that in the comments down below. But yeah, I guess now we're at 65. We're down big time from that point. Either way, Citigroup, keep your eyes on it. And the last stock on the video, guys, for the video is ConAgra Brands, ticker symbol CAG. And they're on, I believe, Thursday. Thursday in the morning. They're looking to do 57 cents earnings per share versus 62 cents from last year on revenue of $2.93 versus $2.97 billion, down 1.5% year over year. Pretty flat revenue growth, or not revenue growth, pretty flat revenue for ConAgra Brands. And this stock's pretty beaten down, not too bad, but it is down about 11-12%. We are seeing a death cross. We're under the moving averages. Not the best sign here, so I'm not loving that. But we'll see. Maybe we do get a reversal in due time on ConAgra. So what do you guys think? Again, I don't own any of these stocks, but I'm watching all of them as, again, earnings season is here. It's upon us officially. So what do you guys think? Let me know your thoughts in the comments, and let me know if you own any of these stocks. And don't forget to get up to 15 stocks for Moomoo with at least a $100 deposit. Simply use that link down below. The link's right here as well. Well, actually, I'm not editing this video, so you can't see it, but the link is starsurfs.com/Moomoo. And for a limited time, guys, get this, your uninvested cash will earn 8.1% APY, so it's a no-brainer, man. Get your free money, and of course, it helps out the channel as it is an affiliate link. I appreciate you all, as always, and with that being said, cheers. I guess that's it. And oh, by the way, check out the Patreon as well while you're at it for my private portfolio, plus more. All of that's down below. And with that being said, I'll catch you later.